Freya, you've given us a very insightful presentation in the morning to sort of the general economies, and one of the key economy that we kind of talked about is China. I think center in the pages of a lot of news right now is the defaults, the potential defaults. I think some of the firms have already seen some technical defaults itself. What do you think will be the impact of companies defaulting in China itself? Do you think China will be able to withstand this default, and what should be the position that the government is likely to take?
I guess the bottom line is really at this stage that we're not looking at a kind of an Armageddon type of blow up, because it does seem from the kind of total debt levels in the economy, when you look at that as a percentage of GDP, it's kind of about 225% on a gross basis, which on an international scale is not kind of extremely scary. And that tells us that the central government does actually have the strength to go into the rest of the economy and deal with whatever kind of a cleanup needs to happen. But what's concerning is that there's been a very fast increase in debt to GDP, and that actually historically is a much better indicator or predictor of crisis so far in history. So we kind of take that as a baseline and then say, well, what's different about China, and why should China be able to escape this kind of the predictors that we've seen so far? And we should say actually that China is not only hitting the mark in terms of how fast you see debt rising as a percentage of GDP before banking crisis or financial crisis, is actually kind of double the median that we would expect in that kind of 5-year run up to a crisis. So we see a lot of problems bubbling there under the surface, and I think especially at the beginning of this year we've really started to see a lot of that come online, with kind of the talk of default and the small bank runs, and also in the copper markets there are some signs there going on that there's something not quite right, and a lot of the time when you talk about China and you think, well, there is obviously a debt problem there of some scale, but a lot of the time people are saying, well, maybe it's not quite such a problem, and maybe China's not the normal typical EM, because you don't have somebody from the outside coming along and saying you guys have to pay up. It's not like a type of Brazil in that sense. So you have kind of a lot of it is financed domestically, but we know actually that the Chinese have been quite ingenious in getting around those capital controls through, for instance, the copper financing. And these jitters that we've seen in the copper markets recently, and the PBOC pushing the renminbi a little bit, shows us that there is actually some international aspect to this debt. And when you start to look at those biz statistics on a nationality basis rather than a residency basis, then you start to realize that a lot of these companies have been working across the border. So the foreign debt exposure is much bigger than you would expect.
I see. So the problems actually could potentially be much bigger than we expected, but at the same time China is able to deal with it, because it's probably not one of the typical economies we're likely to see in talking about another sort of not so typical economy. I think Japan. Once again, I mean, we've heard lots of stories that could this be the new era for Japan? Could this be it? Could this be the revival for Japan for the next 10 years itself? I think during your presentation you've also talked a lot about Abenomics and its sort of impacts on broader economy itself. Why don't we turn sort of the attention and focus on the sort of impacts on the investment industry? Particularly, I think some of the programs they've introduced include things like NISA, sort of a long-term savings program. What's your view on this?
So I mean, for us, the key problem in Japan is a structural one, in that too much of the income in the economy flows towards the business sector, and actually that kind of then generates already an excessive investment rate. So trying to push the economy in the direction of more investment is for us is actually the wrong direction. What they should be focusing on is private consumption and trying to help households to gain that increase in wages that in a permanent sense, rather than just the bonuses, to be able to step forth and power growth, whereas what we've seen so far with Abenomics, or I think my colleague Simon Long referred to it as Coronanomics rather than Abenomics, because it seems that the only arrow that's actually come through and gone anywhere near its target has been Kuroda's arrow, which is the monetary policy. And then again, if you think about what we've said is the structural problem in Japan, really that hasn't really helped with that structural problem. It's generated a lot of inflation, but it's been the type of inflation that's imported because the yen is much lower. And now, actually, with this consumption tax hike, which is not due to Kuroda, but it's going to definitely make Kuroda's life a lot more difficult. We could actually see the CPI inflation pushing up towards that target just because of that, in a temporary sense, because of that increase in taxes that we've seen coming into play today. So again, it's making life more difficult for private consumption. So wherever you get kind of a choice, it always seems to go in favour of the producers and the wealthy, rather than going in favour of the households, which are the side of the economy on the flows sense that actually needs to be boosted.
So are there measures that the Japanese government would actually advise Shinzo Abe to actually undertake in order to create a substantial and a real boost to the consumers rather than just the corporates?
Well, so far all we've really seen is on this third arrow of the structural reform is talking about kind of reducing lifetime unemployment, which again is a nice supply side idea, but it doesn't really help with our household. And then kind of wherever you have an increase in household taxes, you seem to have a kind of offsetting incentive towards investment. So we haven't really seen anything that actually helps out the households, apart from the politicians kind of going to businesses and using a kind of a moral suasion type of argument. I know there's probably quite strong connections there, but I don't know if that's going to be enough to actually push them into getting what is the critical difference in a longer term sense, which is an increase in nominal wages.
So, Freya, just one last question. I think this is $1 million questions for the asset management industry. Which of the Asian economies do you think has the most, investment potential in the short to medium term as well as medium to long term?
Well, I guess if we're picking up from Japan, then actually we think that they're going to go for another stimulus, another bigging up of QE. So you probably get a depreciation of the yen again, and that relationship between the stock, the equities, and the yen is likely to stay in place. But if you want to go for a more straightforward play, and you perhaps don't want to go into the details of the equities, then maybe just short the yen if that's the thing that's generated in the first place. But I guess outside of Japan, in a longer term sense, we are actually more positive on the reforms in China, but that means kind of pain before gain. So there isn't a strength there in the next 2 to 3 years, and actually there's more likely, in the good scenario, oddly enough, that there's a manageable debt crisis in the shorter term. Okay. So I don't. While people are kind of already very bearish on China, it seems when you have these kind of disappointing figures coming through and the Aussie dollar doesn't actually move at all, I think that a lot is already priced in. But the possibility is that I don't think that necessarily a crisis is yet priced in, and a crisis could be coming. So I guess I'm not sure is your answer in terms within Asia, but a lot of what we're talking about, actually, the flip side of that is that China, has rebalanced against the US. And has lost a lot of its competitiveness, and the US has gained a lot of its competitiveness. So this is a kind of a zero-sum type of trade-off. So the US actually, from the second half, looks like still our favourite bet. So I know the US isn't actually in Asia, but it's
no, that's a good way to put it. So in the short term, it seems like it's going to be US in terms of the economy in itself. For China, the story will be no pain, no gain. So with that, thank you very much for your time.
Thanks for your time.